Hey guys, today we had a very excellent rally in both indexes, Nifty and Bank Nifty. Nifty started off with a slight downtrend and then it reached this level where there was a gap up initially, right? And that gap was filled. And after filling the gap, it continued to rally continuously till the end of the day. And the pattern was much similar in Bank Nifty as well. What is interesting to note here is that it took a great support here and then it consolidated and then we were like wondering where the market would go, right? And I was extremely bearish for the days to come. To some extent, I'm a bit surprised with this rally because this was a level that was, cleared after a very long time. But within some 3 days, it managed to give a close slightly above that, right? And that was a very interesting close for Nifty. Now, as the view changed from bearish to bullish, not really. This could also be a trap. Very well, this can be a trap because if Monday there is a big gap down, then all the sentiments will become bearish again. I am just, giving a slight bullish, consideration just because it managed to clear this level. We saw how these levels have worked in the past. It's been continuously tested and then finally it managed to break. Again, it went up. Again, it managed to break down. Again, it went up. But this time, what's going to happen? That will determine the outcome because if the Nifty manages to cross and continue further higher and then it reaches 18,120 to 18,200 levels, clearing that, it's completely bullish. Until then, we still have hope. About 300 points of points are left for the sentiments to turn bullish, right? So anything can happen before that. So we will have to see what Dow Jones is going to do tonight, and also Singapore Nifty, how it is going to support, plus any world events or any other information that might come. We will have to closely watch that. If nothing happens, then our own market has the potential because Adani news is going on and some sort of changes and positivity and results are also coming out of various stocks that's been positive. So there could be some sort of triggers that can take the market higher. There is a good possibility for that, but I am bullish only when it clears 18,200. Until then, I am keeping the long-term mid-term view of bearishness with full momentum. The moment it comes back again and touches this level 17,400 and then it breaks 17,300, I am extremely bearish. And then like I said, the target is of about 16,500 levels. Right? Considering all these inputs, let's explore the FASP levels for Monday. The T7 levels are at 18,400 and 17,200. One of the things, if you observe, whenever there is any sort of increase in the market is giving a positive trend, the call values are really appreciating faster, and more than what the call value is appreciating, the put values are just eroding too fast. Too fast. If you initiate a straddle, probably of 100 rupees, 100 rupees each, let's say, uh, for this sort of move, maybe you are getting the price to 100 to 140, but the put value has gone from 100 to just 40 rupees. There is a terrific erosion in premium in PE side than in call side. So does that suggest something? Could be, yeah, because one of the there are two ways to see. One, that call side premiums are extremely strong, and then market is bullish. That's one way of seeing it. Or second way of looking at it is that the call premiums are very strong, and then making everybody believe that call value is so strong, and then people are afraid to take P value, P positions. And then suddenly, when there is a dramatic fall, everybody will feel that, oh my God, I missed out. That's exactly what could have been a trap. So we don't know what is the situation. So my sincere advice is that keep going irrespective of the losses that you might find in the straddle. It's better to stay edged on both the sides. Don't go directional, because the breakout at this juncture can happen in either side. So I am not going to uh, take any directional positions. I will rather wait for the breakouts, because these breakouts are really worth waiting for. Yes, say that you initiate some 10 straddles. Let's say that 8 straddles fails or 9 straddle fails. Probably you have also done some sort of hedging and then managed to minimize the losses. But one straddle that goes in your favor can simply give you returns that you will not even imagine. So terrific returns can happen. Okay, so that can happen anytime in this month. So it's better to stay in straddle position than holding a single-sided positions. Having said that, what you can do as a writer, my suggestion is that write far OTMs, like even though the no T7 is there, if there is any increase, the PC values are not depreciating. I have tried that. So what I would suggest is that 18,400 is the T7. Rather, I would suggest that you write 18,600, but on the downside, you write 18,500 or 600 itself. The PE should be 17,300, and you can write 18,600. Such positions can also be created, and then collect the premium. And if you think the premiums are really good, it's not bad at all. Like last month it was like throwaway price. Now the premiums are inflated because of the volatility. So you can continue to write far OTMs and collect the premium for the rest of the day. If you're a buyer, wait for the Monday open. And the Monday is very, very critical to me, because this was a surprise twist, the market rallying up and then closing just above this. This is a surprise for sure. Uh, this surprise um, should also be given some weightage, because uh, whether is it a trap or whether it's a trend continuation, that we will get to know only when the first hour of market is completed on Monday morning. So my suggestion, if you're an option buyer and you don't like initiating a straddle, please ignore the first hour. No matter what sort of movements and volatility that you see, please skip that part, because uh, there are high chances that there will be big candles, like something like this or something like this, series of falls. Before even you could think, the market would have completed the moves. So that sort of strange things will happen on Monday. So I strongly advise people to ignore the first hour and then go directional. In the sense, let's say the first hour has taken positive, it has gone to T2 level. Okay, let's say after 1 hour the market is trading at T2. Go for the calls. Keep the higher level as target. You can keep T3 as first target, T4 as second target, and keep trailing it, because this is a strong reversal zone. You might find a reversal here. Supposedly at the first hour itself the market has cleared T4 levels, then wait for it, because it has to really break and then go further higher. Follow the trend itself. Don't take any contra position, because we are at a very, very critical juncture. One wrong side position, it's good enough to wipe off the capital. And particularly if you're trading high volumes, anything can go wrong. So my sincere advice, wait for the first hour and then follow the trend. Don't take contra positions. Contra positions you can initiate when the market is at the zones. Like T4, you may want to try a PE position and keeping T5 as stop loss. But anywhere here, do not try a contra position. Always follow the trend. Similarly, on the downside, if it is going down, say it's at T2, take a PE position, T3, T4, T5, all will be the targets. T1 will be the stop loss. Suppose there is a gap down opening at T5, then you should wait and take, probably you can take a CE position and then keep T6 as stop loss and then keep trailing it. Only when it is entering the zones, that's when you should think of taking contra. In between, do not take any contra positions. If I have to put it very simply, take contra positions only at the zones, and in between play with the trend. Yeah, that's the trade setup for Nifty. Let's check Bank Nifty now. Bank Nifty also had a similar pattern, like it gave a strong upward gap up, and then it continued to come down, and then we saw continuous uh, reversal happening till no, it reached almost to the zone where it got rejected some time back. Like it fell down and then it had multiple stories here, just like Nifty. Bank Nifty also has multiple story around this level. It played along this zone multiple times in the past, and it managed to break. And after breaking, it took a support in this zone, and then it reversed drastically. Again, it came down. Again, it is trading near this zone. So I don't know whether it is a trend reversal or it is a retracement or probably setting up of some trap. My sincere advice is that since this close is really, near this one, and the volatility is extremely high, like each of these candles are like, 150 points, 150 points, 100, 200 points, and so on. So my sincere advice would be give away the first 1 hour. This is the first time I am, suggesting for both the indexes to skip first hour on Monday morning. Reason being, there could be terrific volatility and it is trading near a reversal points or a trend continuation point. So that's a decision making spot. If you are right, then you'll be in very good profits. If you're wrong, you will be losing your capital. So why risk so unnecessarily? Rather, you can initiate a straddle, but if you're not comfortable with straddles, then if you want to play only directional, wait for the right time, give up the first 1 hour and see where it is trading. Supposedly, after 1 hour, it is trading within the zone itself, still not getting a breakout. I would advise skip another 1 hour. Let it move far away from the zone, because after, even if it breaks, there is one more mini support zone which will act as resistance now. So these are like strong reversal zones. Like you have till T5, T1 to T5 is a strong reversal zone. So on the upside, you may see the market moving. Still, there is a strong potential for the market to come down in one single candle also. Like you see this one. This is a band of about 450 points, 500 points. Look at the wick, right? This is on the budget day. Just like that, it came down and then it rallied up, right? This is close to 800 points fall. Okay, you may say that this is an even day, but look at it. The power of it, even though it is an even day, the power of zones is this, right? It came and then very next candle it jumped up. It's not even a next day. It's the same candle. It's 2:45 and this is 3 o'clock. So it just jumped on the very next candle itself. That's the power of zones. And why I say that? Because if you see some sort of gap up and then, going here, there could be one single candle, it will breach all these things, like how we see here, right? That's the kind of, trap that can happen. So my sincere advice, once again, please don't be unidirectional. Take a straddle. If you can't take the straddle, just ignore the day. First off, let it let it clear these zones. I am quite not comfortable for anyone initiating a position around this level, both with the trend or against the trend. Okay. However, I don't say that it's impossible. You cannot do a trade at all. I'm saying that if you can skip it, there are better days in which we can comfortably make that money. Probably, you're thinking that with 1 lakh, I can make 2000 rupees or even 5000 rupees in this trade. Maybe if you avoid this, you will still have 1 lakh, and the next day you can comfortably make much more than what you are expecting. So it's up to you. I am clearly warning you not to trade in these zones. Even if it gives a gap up, don't trade, ignore it. I would say once it clears 42,200, then go for CE side, strictly keeping this T5 as stop loss. Let's say the market has reached somewhere here between T5 and T6, take a CE position here. Okay, then keep T5 or T4 as stop loss. Don't wait below that, because plenty of stop loss hunting is happening throughout the day. All right, algo candles are triggering, and then just like that, everybody is losing money. So if you want to really take some risk, I would say that go for upside only if it breaks T5, uh, and then keeping T5 itself as stop loss or T4 as stop loss. On the downside, Similarly, I would say that, wait for it to break either T1 or T2, then go for PE position, go with the trend. And that is a lot of scope. You can actually take PE positions once the market is crossing T1 or T2, whatever it is, wherever it is closing. I'm comfortable on the PE side as long as it's not in this zone, and then market is playing below. Let's say it is trading at T2, enter PE here, keep this T1 as stop loss. If you are entering here, keep the previous close as stop loss. If you're just trading at T3, then T2 as stop loss. Likewise, you can use the stop loss one level before and then keep continuing in the PE position. So as a writer, once again, I will strongly suggest that you should be writing 43,500 and 43,000 levels. Please don't even write T7, because just a small movement here, the CE prices are just like that, getting replenished. It's not decaying. It's not decaying at all. It's just getting back to the profits if you write a position, it's just jumping back and then giving you negative results. So the CE side premium are not eroding. With a simple move, it's coming back to the original price. But the PE positions are eroding twice as much. Like supposedly you initiated a straddle, maybe you are gaining on the CE side 1,000 rupees, PE side you are losing 3,000 rupees. That's the kind of decay is happening on the PE side. So my suggestion is go ahead and then write 43,500 or something like that. And then on the downside, you can write something like T7. That is comfortable. Or if you want to play really safe, you can write 40,000 or 39,500, something like that you can write, and wait for the premium collection throughout the day. So that should be the trade setup. Although it's a very, very broad and too many conditions I have given for the first time, because I am not comfortable for any sort of positions around this zones. Okay, these zones could be the deciding factor, and let's see what the game plan is. With keeping all these inputs in mind, play safe. And I may not be joining the stream on Monday, uh, as I will be busy with mentorship. But then, if possible, I will try to join in during the mentorship program itself, and see you all on Monday. Until then, take care. Please play judiciously. Do not be in a rush. Handle things with care. Market has better days to come. So if you can skip Monday, that will be great. So that's my last bit of advice. And thanks a lot, guys. Have a fantastic weekend. See you. Bye.